rock, I promise I can fly to check a mailbox. Invoices sounding like Geostar. Pill pop house, and it get money, you on top of ears pop. She lick my lollipop and my teardrops too.
Ripping culo. Gang, that's all I'm on. Hey guys, yeah, I'm just getting used to this thing again, alright? I don't even, there's dust all up on my microphone. Anyways, we gonna figure this shit out. Don't you worry, y'all. And I'm not even from the South. I don't even know why I said y'all, and I don't even know why I'm talking like this. Alright. I think I'm just gonna get right into it. Welcome to season 2. If this is your first time seeing one of my videos, first off, welcome. But my name is Sean Lucas, and I make videos out of the stock market where I give my take on the hot stock of the week by showing previous techniques and methods I've learned throughout the years to either trade or long-term invest. And I consider all my previous videos up until now, I believe there's 50 some odd videos, season 1. And that includes book videos, inflation videos, Bitcoin videos, stock market videos, company analysis videos, vlog style content, trade up series content, and I think I nailed pretty much all of them. There was a lot of videos that I was very proud of making. I think the whole year I did a lot of changes. I made a lot of changes in the way that I came up with the video, and a lot of changes in how I edited the video. So I am very proud with that first year and a half of progress. But it's time to finally start making videos again. You might have noticed that I haven't been posting much, and it's because of one very major reason. I've just been really busy. So yeah, I've been working full time, coming up on a year now. If there's something that you guys know about me or something that you could have picked up on me by now, is that if I'm gonna do something, I plan on doing it right. So for the past 4 to 5 months, I've been really trying to nail down my job, right? Really get comfortable with it. And it really did take some time to get comfortable with it. And I know there's a lot of people out there that will say, well, Sean, if you really wanted to make videos bad enough, you probably would have found a way to do it and do it right. And in a way, that's kind of what I'm trying to do now. Like I said, I am busy, so I don't have all the time in the world to research for a week, write the script, film the video, edit it, all the things that I used to do like I did in the past year and a half. I mean, graduating during the pandemic and not really having a job to go to at the time did really clear up my schedule to allow me to make those videos the way I did, but that is just not the case anymore. Fortunately, I do have a job now, which, I mean, I've been there for a year, but almost a year. Couple months shy. But I am getting into a more comfortable space where I feel like I can start picking up my old hobbies again, and that, you know, was for a while was working out, and now again is YouTube. And if you guys don't think about it, like YouTube, it's a lot on the plate. You got to do the research, you got to do the script, you got to do the editing, the filming, filming before the editing, but you understand. All this put together kind of gives me the opportunity to do the series that I planned, or I thought about a year ago. And this series would be called The Week's End Report. Now, this report will be coming from the 15-minute podcast, the Robin Hood Snacks podcast, where there's 2 dudes that talk about the 3 stories during that day. And they have a weekly podcast that comes out on Monday, Tuesday, Wednesday, Thursday, Friday, usually. So what I'd be doing was I'd be reviewing these podcasts, picking up the stories that I think were the most interesting while going ahead and putting my own twist on it. Obviously, I'm also going to be having some of my very own stories that I think is beneficial to you guys, and coming to you guys with those stories, because that's kind of what this whole thing is about, is trying to show you guys a method of thought and how you should go about investing. Obviously, guys, this series is not set in stone. It should change throughout time. That's how good series change. But it's a way for me to keep in contact with a world that I was so involved in just 4 to 5 months ago, and allowing me to do something that I'm very passionate about, which is make YouTube videos. And no, you won't just get stock market videos from me anymore, or just stock market videos from me now. I will also plan on doing some vlog style content, along with some trade up series stuff, and possibly some other parts of my life that you guys might not know about, because it is the Sean Lucas channel. Investing is a big part of my life, as in that was my finance was my major in college, and all this other stuff. But I know that there's a lot of parts to me that I feel like I would like to share with you guys. I plan on making a video once a week, then after some time, moving up to 2 videos a week and really getting back into the swing of things. But if any of that sounds interesting to you guys, please stick around and enjoy the rest of the video. All right, but that's enough out of that. Let's get into this. So for our first story of the day, we have Sherwin-Williams. And the thing is about these early stories is that I'm gonna go through them fast because there is two or three stories at the end that I really think is the biggest ones here, and probably the one that is going to end up on the thumbnail. Sherwin-Williams, I think this is a major one to recognize quickly and for this company and sector, which is the sector for home improvement. While the pandemic is wrapping up here, more and more people are going back to work, which means they won't be trapped at home for as long as they were. So they won't see the imperfections of their house and see areas of opportunity to improve their house. This also goes for companies such as Home Depot and Lowe's. Basically what we're getting into is here, less demand means possibly soon, maybe our wood prices will finally go down. Just a thought. Moving on to our next story, we have something that is near and dear to my heart. That's something that I used to drink every single game day. And no, I'm not talking about a game day where I was actually playing a physical sport at. No, I'm talking about game day as in college game day, as in pre-game for the game. Talking about Coors. Coors is retiring their 11 cheapest beer companies, of which the 3 major ones that I know is Milwaukee's Best, Keystone Ice, and Miller High Life Light. Since the new trend in college drinking and binge drinking in general is less volume of beers with added flavor or different varieties of flavor, unlike the companies that I just previously stated, having high volume, low flavor, or not having any different flavors has become less intriguing to the customer who is deciding to binge drink. This method for Coors is them trying to shield themselves from inflation. So basically this is one way to beat inflation is to cut off the lower quality products of your company and premiumize your higher end products. So then you add on the extra dollar to your premium products. So no, it's just a story. Moving on to our next story. Our next story is one that I thought could actually catapult us into the future, as long as somebody who doesn't have bad intentions gets a hold of this technology. And this company's name is Clear. Clear is a biometrics company which helps with self identifications. Basically what they were saying is that this is going to help in their airport situation in really identifying yourself. I don't fly that often, but even the few times that I did go flying, it was always, I mean, it was super stressful going from, even from in Michigan to Florida and identifying yourself that way, and going from Michigan to Cancun and Cancun back. I mean, that was a whole different process. Who are you? What are you doing? Why'd you even leave? What are you talking about? I went on vacation. So the way that they're going to be doing this is that they're going to be scanning your retinas or your face patterns, but their stock was up 75% since June. And if this company succeeds in what they're trying to do, is they're trying to get rid of the need for a wallet. So this, as much as it goes for the flights and airports and all that, it could also go for getting pulled over. The cop going, hey, who are you? Show me your ID. Who are you? Who are you? Quick question, sir. I'll be asking the questions here. Now for this next story, and from my recent experience in Detroit, I didn't end up using either of these 2 companies, but if I did, I know exactly which one will be here for the long haul, or at least longer than the other one. We have Uber and Lyft. These 2 companies are not the same type of company anymore, and what I mean by that, it follows. Uber and Lyft both revealed their earnings. It is kind of scary what is going on for one of them. So what we have is Uber. Uber is the only company that is truly making money out of the 2. Uber, they're up 24% since 2019. Now, a key factor and a key thing to mention here about 2019 is that there was no pandemic in 2019. Lyft also announced their earnings, which is a little misleading. So they're up in revenues, but only compared to 2020. And if we know anything about 2020 is that there was a pandemic in 2020, and not a lot of people were traveling in 2020. So, man, I hope they were making more money than 2020. Otherwise, it's not good. It's not good business. So the only one that is really growing out of the 2 is Uber, and Lyft actually announced adjusted profits, which means they made a bunch of decisions to move around in their company itself, cutting a lot of people and cutting a lot of costs and firing a bunch of people. So it's not a healthy profit. It doesn't look good for Lyft. Now, on to my next story. which kind of grinds my gears a bit. And I don't know why people think this is the solution, but let's hear it out real quick, and I'll get back to you. We have the top cop of finance. That was the title of the story. And they're trying to describe the crypto traffic light situation right now. Since crypto is somewhat new to the general masses, they think it's the Wild West and it's ripe with scams. So this guy named Gary that they bring up, the boys of Robinhood, they bring up this guy named Gary, and he's apparently the commissioner of securities. He wants to try and protect investors in the crypto world. But Bitcoin isn't a security, right? So can't really necessarily do it yet. And they went into the background of this Gary guy. Apparently made his money at Goldman Sachs, and he respects the coin for whatever that means. But he was comparing crypto to traffic lights, and really comparing crypto to the early ages of cars. At first, when cars were brand new, there weren't many rules and regulations on the car, and there was actually a lot of people that were walking in the road. So things weren't as safe. But throughout time, when new rules and regulations came into place, it allowed the car industry to boom. A lot more people could get into cars, they could buy cars, and this allowed traffic signs and speed limits to get increase in their speed limit, meaning that people could travel faster and safer throughout time. Now the boys at Robinhood, they think like Gary. They think that more regulation could help investors in the long run, where we could be safer and grow more altogether. Now my thoughts on this is quite the opposite, really. It couldn't be further from what crypto was actually made for. Sure, it's a little unsettling that somebody could hack into your wallet and steal your Bitcoin, your Dogecoin, or your shitcoin, right? But this whole system was brought to the people as a way to hedge their bets from the regulated currencies. And in my honest opinion, the government wouldn't want us to hop in just to help us out and for their own health, right? They're hopping in because they see there's meat on the bone, and there's something in it for them that isn't really in it for us. I hope that made sense, and I hope majority of you realize what's wrong with that. But moving on, now there's something that I want to keep an eye on with this last couple stories, and if there's a cool way to invest in this and make money off of it, I won't hesitate to forward that information to you guys. But I wanted to spark the conversation and bringing it up here. I see a trend of online apps or sites that are reaching out to the physical space, just like DraftKings. DraftKings reported an earnings a little bit ago, which revealed something that nobody really expected at all. They reported they're coming out with a sports betting sports bar. Now, again, there's gonna be one that's opening up in Detroit. Now, the way they described it is a strategic upscale betting destination. But the whole trick is that the customers can only bet on their phones, the app that they're using, which is DraftKings. But no other betting can take place like in a regular casino. You can't bet like in a poker table, a roulette table, a slot, or any other betting apparatus. So that the boys at Robinhood dubbed this as the virtual Vegas. And they also brought to the attention that they're hedging their own bets from an online app, an online site that is coming to a physical space. Now I'm calling it right now. I believe that this is going to become something bigger, that we're going to see a trend into the future, just like this next company, Squire. Now Squire is an online app for barbers, okay? In 2020, people didn't go out much to go get their haircut. I am a one of those victims. I didn't get my haircut for, I don't know, like 8-9 months. But Squire is a place for barbers, independent or not, that they can set up and organize all their appointments. Now, Squire hopes that their customers will rate and review their overall experience and the barbers that cut their hair. And then this will inadvertently become the customer's go-to place to find their new barber. Now, with the whole world opening up again, Squire was actually able to get some fundraising for their company, and they actually tripled the valuation of the company itself, coming to $750 million, which is the craziest part because they have now come full circle. They have become an online barbershop that had to buy a physical barbershop. Now, for the last story of the day and my first video back to you guys, we're going to be talking to a company that is very near and dear to my heart, and I know I said that a lot, but this one is because I've made a bunch of videos on them in the past. Now we're going to be talking about the company Virgin Galactic, or ticker symbol SPCE. This company has been so intriguing to me in the past, and at the most it's been this is a form of nostalgia to myself. Now, my roommate and myself have been investing in this company ever since it went public, and well before I even started making videos on this channel. But that is enough of going down memory lane. Let's talk about why I'm bringing them up in today's video. Now guys, if you haven't heard by now, Virgin Galactic has made their first successful flight with none other than Sir Richard Branson himself on board, which was successful. Kind of. With the test flight being successful and Virgin Galactic really putting their money where their mouth is by flying their billionaire CEO, Sir Richard Branson, on the flight itself, my hypothesis and my educated guess would be that the stock price would have been increasing for the following weeks. But that really hasn't been the case. Now, we all know that this company's stock's price hasn't been the most orthodox over its period of being public, and is sometimes reaching towards the parabolic status. But something that is very obvious and something that you cannot miss right now is that the stock's price has been decreasing for some time now. And part of it is being done by the FAA, the Federal Aviation Administration, FAAing SPCE's stock. The FAA is grounding all flights from Virgin Galactic because of some flight issues it faced during the Richard Branson testing. And what it all boils down to is that pilots were ignoring warning lights that were shown in the cockpit. Now, I don't really know much about aviation at all, but I can assume for something like this is that you have to get, approved, and you have to show them, hey, this is our blueprint. This is where we're gonna go. This is the trajectory. This is how high we're gonna go, especially if you're planning on going to space, right? And in the case, I think this is something that the FAA and other organizations like the FAA like that would handle. Sure, if you go slightly off track and decide, hey, let's ignore these warning lights, there surely is going to be some repercussions, right? And the part that kind of really bothers me about this whole thing, and especially as an investor, is that I've heard people talk about this on the internet, that Virgin Galactic actually had fired a few pilots prior to this, because they had brought up the warning signals in the warning red and yellow lights in their testing, I believe. So what we're waiting for right now is the FAA to wrap up their investigation on Virgin Galactic. And something that might look as a bright side is that the pilots, obviously they are trained, they know the path, they knew the course that they had to take, and they trained on that. Obviously they planned on staying on course. However, you can only plan so much, and what seems to be the major cause of the reason why they went off the pre-planned flight path is the weather. And the weather is something that you cannot change. You can only make minor adjustments to during the act. So I believe that's what the whole issue is and how that actually happened. So hopefully the FAA keeps their fines to a minimum, and Virgin Galactic can use this as a learning experience to not mess around like this, especially when you're going to space, technically.